This is it. We're in. This is all about your money. We're live right now. We're recorded. This is for our investors, Foundation Capital. We got the trustees, the top trustees, Mitt and PV. Got you guys back on social. We're fresh off of a social Foundation Capital GTA meetup last night, and we're like, you know what? Let's talk to our investors. And if you guys like this, we're going to be doing this a lot more. So we're going to have a little bit of a conversation today about landlording in Ontario, some of our Q1 highlights and what's been going on. And boys, year 2 Foundation Capital private REIT in the books. Been a ride, eh?
Yeah, it's been a good, exciting year. I think lots of growth, lots of cool things going on in the fund. We've been playing around with some new strategies as well. So overall, very excited for the year to come.
Yeah, I think we basically, we're in year 3 now, but like we've obviously banged, I think in the first 3 months of the year, banged out as much as we probably did in like the entirety of 2024, right? So
yeah, it's all of us have been super productive. And the REIT just closed on another 12-plex yesterday.
Yeah.
So big news there, launching here on this this video here. And yeah.
Funny enough, we managed to hear word that it closed like 5-10 minutes before we entered the venue for the social last day. So it's funny how things go down to the wire, but we got it done.
Yeah, I'm pretty sure it has happened, like, because it happens to us all the time, and we're always saying it's just us. But I think even speaking with our mortgage broker Nicholas, for Capital, there's your shout out.
But better like the video.
He's always saying a lot of the stuff. No matter how prepared we provided everything, we're good, everything's gonna be fine. It's just like, for some reason, lawyers are always scrambling. There's always like back and forth and last minute items. I don't know. I feel like at some point you should just be getting like checklists done and completed like way beforehand. But
I don't know if the rules keep changing. Lawyers, it should be pretty straightforward, but in like the mortgage broker world, there's always like one more thing they need or something, and it's frustrating, I'm sure, for the public and for normal investors. Yeah. Obviously, us in the REIT still deal with this kind of stuff. We're not immune to it, so we shelter our investors from those headaches a lot of times. Last minute requests.
We're still getting it all done in time and whatever, but like, yeah, it's like we were supposed to be ready for the social. We're waiting outside, and we're like, all right, are we closed yet? Like, send us the confirms. And it's like, yeah, we're good. So
It reminds me of a funny conversation I was having with one of our investors last night. As I was just telling them, we had recently removed a tenant that was behind on rent for many years and had over 40,000 in arrears, and he was shocked to find that us as the quote unquote bigger guys don't have a special LTB or, kind of a more streamlined process. The way when you go to the MTO, there's a special line for the commercial dealer type of dealerships. And I'm like, we go through the same BS and headaches. We obviously have the systems and processes and also resources to kind of streamline it, but getting them out is the same as if you were trying to get someone out of your basement unit. There's no privileges there, but because we're bigger and we're at scale, we're more prepared to deal with it. We have multiple units bringing in income versus if you have a duplex and both people stop paying rent, you're kind of screwed. So, a lot of the things that come with scale offset that. But he was just interested to see, we also deal with all kinds of these horror stories. It's just very much second nature to us, and we're used to it now that we don't need to post and be like, oh my God, our guy's behind 40 grand on rent. It's another day at the office for us,
Yeah. And thankfully for the public, when those bad things happen, usually it's in our other corporation, not in the private trust for the most part, because for the trust, we've put in a lot of those tenants, and the investors generally aren't. It happens, right? Like we could get burnt on that, but since we have volume, we're able to eat some of those costs versus just if a small time landlord owned 5 units and all of a sudden they have a tenant that owes them 40 grand, that's going to hurt. And that's kind of a reoccurring theme we were hearing last night at the social was a lot of these small time landlords, they're just done and they're sitting on big portfolios and they're just ready to liquidate their portfolios and come over to
I think a big piece of that comes in too is like, we obviously do this full time as a business. We're in it day in and day out. And like, you know, I'm sure you guys all recall when you first bought your first rental property, and then tenant stuff happens. And you're like, oh my God, I got to get to it. I got to deal with it. And you're dealing with it after hours. It's like, it's on you all the time, and you're super stressed. And then, you know, it was supposed to be passive, and it's no longer passive. They're just seeing like, look, they're pretty much getting the exact same return, if not better, by putting it with us. Versus trying to just do it themselves, right?
Yeah, because one of the guys last night was like, almost every decision he's making in his life now, he's like, well, what's that going to cost me percentage wise? And can I just put that money with foundation capital, make more percentage, and then pay off whatever I was going to go do, buy a car or something like that? And I'm like, that's an interesting way to think about it. Yeah.
Another thing I've always noticed is, you know, the people who own businesses or are very high performers in their jobs realize how demanding their jobs or businesses is. And then they very much are the first ones to see that, wow, real estate comes with a lot of headaches. It is a full-time job or part-time job, side hustle, if you will. If you're busy with your business or job to the point where you can't do a side hustle, you definitely can't do real estate. So they're very much the first ones to see, you know what, I'd rather something passive and keep my hands off, or I've been a landlord before, learned the hard way, and I'm out. So I'm seeing a lot more of that happening in this marketplace too.
And I'm sure that it's because the market right now is no longer just like hopes and dreams, and everything is just pumping every day or every month, where real estate is only always going up, so you can buy, and if you along the way or don't respond or don't do things, it's going to keep going up. And I think obviously in the past few years, people have been seeing like, holy shit, you can do everything right and still get screwed, or, you know, things won't always work out exactly the way you want. So it's really taking people to realize that, okay, you know what, I maybe captured all the like gain that I can get by doing it myself, and now it's just really, am I going to just wait 5 years, 10 years, 20 years for like the principal pay down, or am I going to go put it elsewhere where you can keep recycling that capital and making way more money?
It's tough to small-time landlords to cash flow in Ontario anymore. And like you said, the market for them is not just like shooting up, and then they're just, if you want to have your money, you got to sell at that point. So, and it's tough to liquidate right now. So there's lots of factors a lot of landlords are going through. We'll see what happens in the election, but there is some promise, if it goes a certain way, that landlords can continue to push their funds along, make another investment, and not have to pay capital gains, kind of like the American 1031 exchange. People can research about that, but that'll be a big game changer in real estate investing in Canada if that happens.
For sure. I think not only tax efficiency wise, but also just encouraging people to keep their money in Canada and invest, or even some of the other bigger funds who've always looked at Canada as attractive from the underlying investment, but they've always been a little shy because of political tensions or kind of things of that nature. So it'll encourage them to bring capital in as well.
Yeah, Jeff, what would you say? You know, you've been seeing, obviously, speaking with potential sellers, talking to other landlords. What have you been seeing more so? You know, as we were looking.
Well, unfortunately, some of the smaller duplex type properties, it's better to sell them vacant, and then it's hard to get them vacant. So it's a bit of a challenge. But if a landlord can solve some of the problems, and unfortunately in business, you got to solve problems to make money. And if they can solve those problems, get them vacant, the next buyers may purchase it. Some of the current buyers don't want to buy your tenants sometimes. It's just because they're scared, and then the market's not shooting up, so they don't have those recovery things to fall back on. But all the ones that are able to liquidate, they're sitting on some good cash right now, and then they just want to put it to work. So we've been fortunate with Foundation Capital to get some big investments in the last little while. So it was a good Q1 for us. Obviously, we were pushing there for our unit.
Talk about a little bit more about the deal flow. Like, what are you seeing from like buildings on market, or people reaching out saying, "Oh, hey, I want to sell a building," or whatnot that we're looking at?
Well, obviously, commercial agents are active. They're sending us stuff. We still have to negotiate the prices down, but there are deals out there to be made right now. So in any market, there's deals. And I got asked last night at the social, like, are you finding it on market, off market? For the most part, it's off market. We can buy on the market. It's just everybody sees that one. So it's a little bit of more researching and talking to other agents and other landlords and property managers and finding new deals for foundation capital. And then really like understanding what the property is, and then our advantage, seeing our advantage and seeing if we can get in there day one and start forcing the appreciation, increasing the value. Maybe there's a vacant 2-bedroom and we can turn that into 2 1-beds the city will allow, and then we can get a net higher rent, which then the value is higher. So deal flow, it's there. It's just all about timing and funds at that point, and what we want to do.
Yeah. I feel like also in this climate, a lot of the deals we've been looking at, Jeff, people are more open to terms and creative financing like VTBs and stuff like that. Much longer closings in case we did want to buy with CMHC, which is something we normally don't do given how long that process takes, and we had to move fast on some of these acquisitions. So things like that have been very attractive as well in this market, having those type of quote unquote luxuries.
Well, a seller has to really understand what's going on in the market, and they got to kind of help the buyer out if they want it to get to the finish line and close. So they might have to give the VTBs and such, right? Whereas in a hot market, they don't have to give you as much. They're just like, I got the product, come to me. Now they're like, does anybody want my product? And they have to, you know.
And I think the tough part is in this market, you've got, you know, assets or buildings that are like different, right? You've got ones where the guys have like fully turned over the building, it's solid, and they want like top premium pricing. But it's kind of like, is people really going to pay for that? Plus, you know, what extent of renos did you really do? Did you just get high rent, but it's only like, you know, you put like lipstick on a pig, and you got to like, you know, actually go back and, you know, add laundry or, you know, redo kitchens and stuff like that. And then there's obviously like some of the more rundown buildings. Obviously, like we've even taken over buildings where, you know, people are going through power of sale. And it's all about getting to the right price, right? And I want to say like half the time or more than half the time whenever we're looking at some of these power of sale buildings, we probably talked to this landlord or landlords like years ago and said, hey, look, you bought this property a few years back. Like, why haven't you gotten the vacancies or turnover? And I mean, that's our bread and butter, right? Like we just keep hammering it again and again until we can figure out a way to get the vacancies and, you know, push the rents up on buildings. But a lot of you guys didn't do that. And then as cap rates were kind of inching back up in 2023 and 2024, a lot of these landlords became underwater and they kept burning out their liquidity and their like cash reserves to just keep the building, and, you know, because they couldn't refinance out. And then obviously this year we're starting to see like, or last year and this year, like rate cuts happening and caps are slowly coming back down. But lenders are still saying like, okay, well, we don't know if we're out of the tough waters yet. You still need 6 months to a year plus interest reserve. And if it's a sizable enough building, it's like, oh, wait, what? You want me to set aside $400K extra cash and I need to have more cash and all that? So I think, you know, obviously for us, we're looking at those opportunities and trying to make that kind of stuff work. Right?
Yeah.
What about some personal stuff? What do you guys got going on?
Personally, I've just been focused on
working out.
Yeah, I've been focused on the fitness quite a bit. Just hitting the gym as usual, but I think just incorporating walks has been a game changer, not just for the fitness goals, but even just mental clarity wise. Thinking of things while you're on the walks. I made it a habit to not listen to music while I do it, so you kind of have that extra thinking time.
Man, every time I have an investor call, I think I get like 5,000 steps walking around. Like I'm such a pacer on the phone as I'm like explaining what we got going on. So and even our construction consultant, every time me and him are on the phone, I think I get 10,000 steps.
Nice.
It's just always. I don't know if you guys are like that, or you can sit still when you're on the phone. I have to.
No, I can't.
I have to be animated. I gotta talk.
I'm always running around. I'm like always like spinning around circles. It feels like you're running around the world in a sense, because you're just like, this is what's happening. You know,
I check the health app after, and I'm like, oh man, I spiked at 2:00. I'm like, holy crap.
Amazing. I find to do your brain's working the best too while you're just moving. So even when you're on the calls, more ideas are coming up. Things are.
Sometimes I'm dodging my kids if I'm in the house and I'm trying to be on the call and I'm trying to do it all. But if I'm just in the office, I'm just walking around.
Yeah. Nice.
No, it's exciting for all our investors leading in here to 2025. Super cool to see them all last night. And there was like, some of them were talking about, they're very appreciative of us and what this whole thing is, because they have some health concerns and they can just get returns from us and not worry about expenses that pop up in their day-to-day lives, and just focus on family and health. And that was pretty cool to hear last night. That from
no, 100%. I think me and Pete were chatting about it on our way back, and it's like, it's obviously great that we make people money and like returns that way, but it's like the fact that, you know, in uncertain times and stuff, they're getting to spend time with their family, actually focus on like their health so they can enjoy the money that they're making. That was like very rewarding.
That's one of the timelines. Sorry, one of the things I always tell people. It's like, why are you doing this? Like, just to be a landlord? Like, that's a lot. That's a long life, and we know 80-year-old landlords that are still out there doing. To each their own, but it's like, I think anybody listening to this, their one reason was to make money, spend more time with the family. You know, health concerns happen. You can get taken care of because of real estate, and not just that you got to go salt the sidewalks at your rental property on set, you know, like that kind of stuff. Yeah, sorry, Katie,
No, I was just going to say, oftentimes, you know, we look at the reporting and see the dollar amount and figures which we've paid out to investors, and that makes us feel proud. But also, when you look behind the dollar figure and see what the impact that's made, such as more time off away from work to spend with the family, or more paid vacations, or what that money is actually doing in terms of the actual impact it makes on the families, that's always rewarding and gets us fired up as well.
There you go. Nailed it. Absolutely. Yeah. So for the audience, if you guys like this, I think Foundation Capital should be doing this way more often, give you guys a bit more updates on, you know, some hard action points, like what's been going on, what we're closing on, etc. We can like do more in the stream here and add it in. Let us know if that's what you'd like.
One thing I wanted to kind of put here as a call to action is, if you're already one of our investors, you're subscribed to our newsletter. However, it might be going into your spam. So please go into the spam box and mark us as a safe sender. So you're getting your investor statements, which for some of you may be sitting in the spam. I've reached out to everybody, but double check. And get those newsletters where we're giving updates, market sentiment, all kinds of valuable things.
You know, it's funny. One of my buddies is an investor, and I was like, "Where are you?" And he's like, I thought it was invite only. I didn't get it." I'm like, no, you should have checked your spam folder, because every investor, if it says invite only, it's invite only for foundation investors. So if you're invested and you see it on social media, like, just reach out or come to the event. You're more than welcome to show up.
Yeah. Well, definitely nice to put some faces to the names, because sometimes our investors are a line item, but we got to see who they were last night. So, but then obviously year over year, it becomes almost like a family at that point. People brought their kids, etc., running around. Awesome, right? So good times.
Guys, check the spam folders, market safe sender.
You're gonna see all this FC stuff. What are you gonna do? All right, boys, back to work.
All right, back to work.
Good.
Okay.
Thanks for the call.
See ya. Bye.
Bye.